My name is Chris Bowen, and today we're going to be talking about insurance, an exciting topic. If you are a privacy or risk management or security professional, maybe not so exciting if you're my 15-year-old daughter, but we're going to talk about it anyway. There's a couple of things that we need to go over and hopefully you can get out of from this session. One of them is to determine if you have transferred risk the proper way. Another is to learn about how to buy insurance, how to buy cyber insurance. This will lead right into gaining insights on how to use insurance, when you should use insurance, and what place it has in your risk management plan. The other part of it is, how does insurance fit and play in your security incident runbook scenario? When do you contact your insurance company in the event of a security incident? How do you practice your insurance call playbook in a security incident, etc. In this session, I'm going to help you understand whether you've transferred risk the appropriate way using insurance as a vehicle. I'm going to help you learn about how to buy insurance, what to consider when you're purchasing a cyber insurance policy. I'll also help you understand the role that insurance plays in your security incident runbooks. It's a very important part that this insurance consideration plays. We'll help you understand when to use your insurance, how to use your insurance, etc. We'll also talk about some of the ethical considerations that have come up in the cyber insurance debate. Before we get into that, I want to get into a little bit of history related to cyber insurance. Insurance companies haven't always had a cyber insurance policy. In fact, even today, the cyber insurance marketplace is not as mature as you would understand other areas of insurance to be. So, going back in time, in 1997, as the commercial internet was starting to take shape, there was a challenge with some of the customers of Steve Haas, who worked for AIG at the time, in terms of how to cover some of the exposures that some of his customers had as it related to commercial internet. So one of the things that he was trying to figure out was how to cover someone from a third party, a hacker, if you will, someone who's outside of the organization that comes in and inflicts some pain and damage on a company using the internet. At the time, only the costs of a breach were included in the first policy that was written. Again, that was written in 1997. There were no first-party claims that were part of that, which means if you had a rogue employee or someone who was on the inside that inflicted damage, you could not claim anything in that cyber insurance policy. It was strictly for third parties. Later versions were created to help cover other types of breaches. Many of the exclusions still existed, the ones that I had talked about. So sometime after that, the market expanded its coverage, and there were several drivers of this. In 2003, California passed the infamous Senate Bill 1386, which was really the first law related to the privacy of a person. And this included some breach notification. It included some requirements for how you notify, who you notify, what kind of damages can be recovered, etc. And later you saw other states follow with FTC getting more involved in privacy, identity theft complaints, etc. It's interesting to note that a recent article in Healthcare Finance talked about a study where data breaches would cost the industry in 2019 about $4 billion. 2020, by the way, is poised to be worse than that. So in this study, additionally, providers seem to be the most targeted organization for cybersecurity breaches. Nearly 4 out of 5 of them have had breaches over the past several years. Black Book Market Research did this survey that is quoted in Healthcare Finance, and according to the survey respondents, there were about 2,800 or so, nearly 2,900 security professionals. They represented about 730 provider organizations. Those results showed that 93% of healthcare organizations had experienced a breach since Q3 of 2016. Pretty phenomenal. More than half of those have had more than 5 breaches since that point in time. So again, you see that as we get into the expansion of cyber policies, a lot of this came about because of some of the devastating circumstances in which cybercrime occurred. So as we get into today, or since the late 2000s, you see a significant increase in laws, a significant increase in how we can collect, use, transfer, process, store personal information. Some of these laws you're pretty familiar with. You heard a lot about CCPA. GDPR certainly has tightened its ability to enforce privacy of people in the EU. All 50 states now, by the way, have cyber legislation that requires breach notification, those kinds of things. And even outside of the US, you're seeing a lot more regulations happen in the Asia Pacific regions, Qatar, the Philippines. A lot of these countries have requirements for notification in the incidence of a breach. So we all are very familiar with those statistics. I'm going to give you a couple of egregious breaches just to tee this up a little bit. If you think about Yahoo, insurance and breaches are kind of going hand in hand. Yahoo in 2013 had an astounding 3 billion accounts that were hacked. Equifax, I've got many opinions about Equifax. I'm a victim of that breach myself, as are 146.6 million other individuals. Breaches have actually increased litigation. They have drawn the attention of regulators, and the regulatory enforcement mechanisms have increased. As a result, the cyber insurance market has grown significantly. And again, this is due to all the breaches. You're going to see it continue to mature as additional Internet of Things become more vulnerable, as you start to see machine learning, artificial intelligence, those kinds of technologies that possibly could be manipulated in the future. We're going to see more maturity there for sure. So today, there are about 500 different companies that write insurance policies or have that in 2017. There are a few more than that today. Some of the challenges that we have seen and that have been documented as well with securing cyber insurance is there's really a lack of historical data. How does an insurance provider price the insurance? What kind of diligence do they do when they're asking you to prove how good you are at protecting data? There's also the challenge of assessing what could the losses be, what kind of damages could occur. The risks are still really tough to evaluate, and if you see a cascading effect, if you think about the WannaCry, the NotPetya phenomenons that happened just even a couple of years ago, where one incident happened and it cascaded the downfall of production for a global pharmaceutical giant, you see that it's complicated, and our insurance companies that provide these premiums don't really know how to price them all, and so you see a lot of volatility, a lot of up and downs in the marketplace for the cost of insurance. So what does insurance cover? Typically, your off-the-shelf cyber insurance policy will cover things like notifying customers, providing credit monitoring, providing some crisis management and business interruption coverage. They'll typically cover incidents and forensic investigations, some of the remediation. They may cover some investigations by forensics firms, as well as hiring security firms to work with law enforcement and others. There are some areas where cyber insurance can actually cover some of the regulatory issues and some of the litigation issues as well. So if you think about the cost of public litigation, there are some payers recently that have settled some fines and have finished some litigation where some of the costs are 15, 20 million. We're seeing significantly greater costs from a litigation perspective when it comes to some of the bigger breaches that I talked about a few slides ago. So again, you may have witness fees, you may have attorney's fees, you may have fines from regulators. So insurance can actually cover that as well if you get your insurance policy to be written in a way that does so. I will say that we're going to talk in a few slides about some of the challenges of cyber insurance and what it might not cover. But as we think about some of the ethical considerations related to insurance, sometimes you'll get that executive, that risk manager that will overly rely on insurance as a vehicle to transfer risk. What that might do sometimes is potentially let them not focus on best practices from a cyber resilience, a cyber activity type of a scenario. They may pay less attention to good quality hygiene when it comes to security and data protection. So there's the two sides of that coin. I can transfer my risk to an insurance provider. If I'm not really on my game, I may decide to do less diligence in terms of protecting my data. So how do you model for something that you don't really understand from a threat perspective? Insurance companies are struggling with this, and they continue to struggle with this. I'm seeing them become more and more mature as we go, but really they have to threat model, and so do you, around what will happen, what could happen, how it happened or how it would happen, and what the entire impact would be. Consider this for a minute. Some of you remember that Hollywood created a film that was directed at mocking the North Korean leader. In this film, they portrayed the leader of the North Korea regime as somewhat crazy. As a result of that, North Korea attacked the company that actually made the movie. They executed a cyber attack. So was this attack covered? There was litigation over that. Would AIG cover the policy when there was potentially an act of war by a third-party nation state? A lot of times, even just this last year, we've seen several areas of litigation, again, where the insurance policy didn't necessarily cover acts of war. And so those attacks that were happening from nation states, the insurance company tried not to cover those claims, and in some cases they were successful. So as a result of that, when we were renewing our own policies, we made sure that those exclusions were taken out and that we included acts of war as being covered. Sometimes that increases your price, but again, you have to gauge your own risk tolerance. Let's come back to just some of those statistics that we talked about. 93%, more than 93%, according to Black Book, had a breach since Q3 of 2016. 57% of them have had more than 5 breaches in that same time frame. Astounding. 94% of hospitals that have had a breach have not augmented their cybersecurity protections since their last breach. These are enough to make me mad enough to write a blog post on this topic, and you can look on our website and find it. But it was infuriating to me to hear that. So, how do you be prepared? The first thing to do is to be aware of your threats, and to do this, you need to threat model. Threat modeling is a great exercise. It helps you understand where you're going to be vulnerable. The thing that I like to remember about when I'm threat modeling is learn from your past experiences, learn from your organization's past. If you haven't analyzed all of the incidents that you've had in the past 5 years or so, but doing so can give you some astounding insights. What has your history been? Did you remediate previous incidents? How did you do that? Make sure that your company trains your employees on how to respond to incidents. Practice, practice, practice. Your insurance company, when you're going through the buying process, will actually ask you how you train. Align to rigorous frameworks as it relates to cybersecurity. Think about high trust. Think about an ISO standard. Get proof of your compliance with that using something like a SOC 2 report to audit your controls. Remember, the HIPAA is not enough. The HIPAA security rule, written a long time ago, it's very, I would consider it non-prescriptive in many cases, and so you certainly need to have something that's a little stronger than what is recalled in the HIPAA security rule. Some parting advice for you: just remember that in your insurance journey, you're going to have to renegotiate your policies, usually every year. One of the things that we've been successful in is a tower of power approach, and that is to lessen the premiums. A lot of times we will stack one policy, but from one company on top of another, on top of another, on top of another. What that does is it lessens the risk that the additional companies might have exposure to, and thus they can reduce their premiums. You still get the coverage, but you may get a lot less outlay of funding to make that happen. Your insurance broker should understand this kind of a concept. Again, most insurance companies don't want to be the deep pockets in a cybersecurity incident, and so they use some of these strategies to help. When you're looking to any third party to help you with insurance, set extremely high standards. Don't necessarily settle for the homeowner's insurance broker down the street to help you with a very complex set of cybersecurity policies. Find someone who's expert at this. Find someone who can give you the quantification, help you quantify where your risk is, and apply some dollars to what that might look like in the event of a claim. Additionally, mitigate and reduce your risks by complying with rigorous practices. Do your job as it comes to cybersecurity and privacy. Keep your incident runbooks up to date. Practice when you use your insurance during those simulations, if you will. You certainly want to give your insurance folks a heads up if you're in the middle of an incident. You want to do that really at the early part of the incident. There's nothing that says to the insurance company, hey, we're going to penalize you for keeping us in the loop. Even some of your coverage won't kick in until you actually inform your insurance representatives. If you haven't informed them over a period of weeks in the middle of an incident, they may not actually cover the beginning parts of that incident, the beginning stages. So just remember that you need to loop them in at the right time. Again, be mindful of what you're buying. Tie it to your threat models. Understand where you're going to be exposed, where you're not, and apply your policies that way. And then, of course, do your diligence. I hope you have a great cyber insurance journey. If you have any questions, I'd be happy to answer them. Feel free to contact me on LinkedIn or contact our company website, and you can get a hold of me. But thank you for your time, your attention, and have a great rest of your day.